Hey guys, this is a market update. We're going to go over the ARK Invest Big Ideas 2025 report. They do this every year. They cover the growthier end of the market like Bitcoin, crypto, AI, robotics, and a few other kind of tech adjacent investments. The theme throughout this whole report is abundance. Less energy in, lower cost, more productivity out. And so how do we invest in that, right? ARK Invest have their funds and they're not really my cup of tea. They're very focused on some kind of weird companies. I much prefer just investing in a broad index of the best companies and the best brands, right? So the NASDAQ index is really that benchmark. I want to outperform the NASDAQ. Bitcoin is outperforming the NASDAQ. But Bitcoin comes through in everything as the thing that can price the abundance of goods and services, dropping costs lower. So costs are coming down, but we know the fiat system cannot handle costs coming down. It's impossible. The fiat system is a debt-based system that requires inflation. So as all of these themes are going to be dropping cost, that means the fiat system has to print and print and print more money and more debt in order to keep inflating. And so what sits in the middle is two things really. The equity of the best companies, the best tech companies, which has outperformed over the last, my whole generation, right? Tech has outperformed. But you now have Bitcoin, which is a world currency, which should be the most boring investment in the world, that is currently monetizing, and the CAGR is 40% a year, right? 40% annualized returns, which is double the NASDAQ. This is the trade of our generation, and it's the thing I keep coming back to as I don't want to invest in tiny little things. I don't want to invest in individual companies to try and beat the NASDAQ. But Bitcoin isn't individual. It is the broadest diversified financial index in the world, but it's got 40% ARR right now, CAGR. That's insane, and so I keep coming back to BTC. So we'll go over all of that in this video, but first, the Bitcoin price. Look, we're just consolidating here. I was getting really excited as we broke out 106. Tariffs absolutely slapped us down there. Looks like we're just in one of these consolidations again, right? We've had a few of them this cycle. Looks like we're in one again. We're out the narrative right now as other things, right? Tariffs and politics that are in the news. So we're going to come back. We're not going to go to new all-time highs unless we're back at kind of number one in the news. The problem with this support level right here at 1991 is that you can see the last consolidation didn't respect any of these support levels, broke down through it, looked really bearish, and then suddenly just turned around. I still think we are in the bull market, and I still think best is yet to come. But look, we're not in the early stages. We're in the mature end right now, right? I think the breakout from this price here is probably the beginning of the end. Of course, a lot still to go, but from my chart, maybe another 100% here. But it's going to be hard fought, right? You can definitely tell that. But I'm still in, I'm still long, and not selling out. I don't think we're topping here. By the way, I just don't want to sell Bitcoin anyway. It's the best investment. My thesis is wait for a decade, man. Wait till it's a decade older at 500 to a million. Then you can start thinking about selling. If you do trade, check out Bybit, $30,000 deposit when it's down in the description. If you can't trade on Bybit and you have a crypto wallet, you can trade on Apex as well, which is Bybit's DEX. You can get a permanent fee discount, link below as well. Before looking at some Bitcoin specific data, I want to draw your attention to the whole theme of this report, which is technology creates abundance. So how do we benefit from that? Well, you can buy the equity of the best companies in the tech space. That's called the NASDAQ, right? And there's going to be some companies that outperform that. But as an individual investor, your job is to make money, right, in your job, be an expert at that, create the best value that you can, and then just invest in the index of the best companies. That's called the NASDAQ, 20% a year. Bitcoin's going up 40% a year. So what should we invest in, right? AI accelerating the performance doubling rate, right? You can see the performance improvement curve, right? This is important because the amount of creativity output that we get per unit of input is increasing, and we can't price it in with fiat currency. We can't price it in with the S&P because those companies are not producing any real growth. Those companies like McDonald's and Deere and Caterpillar, they can price in currency debasement because they can change their prices, but that's it, right? Real productivity gains is in these companies. The problem is most of these companies aren't going to last, or they're not good investments, and so you have to invest in the NASDAQ, which is the sweet spot of these are the best companies and they're monopolies and they make loads of money. But the problem with those companies is that they have toxic capital on their balance sheet because they earn dollars, and dollars are trash. We know that. You can't have dollars on your balance sheet, which is why those companies constantly buy back their stock. And that's the equivalent of you earning money and giving it away. Why would you want to do that? That's why MicroStrategy has stepped in and actually figured out, wait, a company should just capitalize itself on actual capital. And the only thing for that is Bitcoin. You can't do it with other stocks. There's actually rules against companies owning that much. Look at what Berkshire Hathaway did, right? They're kind of the, micro strategy of the previous generation. We're going to buy great assets and we're going to turn them into basically an index of the best companies that we make money with. That's great, but there's limits to that as well. Now they have loads of cash on their balance sheet. Bitcoin is world capital that you can actually have on your balance sheet. It is a commodity. It is the answer to so many issues in the financial world. And that's why I just think it is the trade value generation. AI advances should unlock massive market opportunities. Self-driving. There is huge disinflationary forces from this. Free market driving costs lower, driving the amount of work needed per unit of output lower. How does that play with the fiat system that requires inflation? Currency debasement through debt creation, either the government creating debt, the government pushing banks to create debt, like the US is doing now, trying to deregulate banks, trying to create, get them to create more debt, or the central bank literally just printing currency units. That's the only long-term outlook there is. And so we just need to invest in something that can price that in, which is the best tech companies and actual capital, digital capital, which is BTC. So these advances are important because they're going to create wealth. And you have to participate in that wealth, either through owning the best companies or owning actual capital that can just price it in, because Bitcoin is fixed, doesn't inflate. So you can actually buy it and then just wait for stuff to get more abundant. And then it buys you more of that stuff. It's an insane realization. We've never had an asset like this before, right? Never, ever, ever. This is the thing. You cannot create more of it. It is the winner. Technology inflection should lead to GDP inflection. So I actually disagree with this because GDP is a fake metric. It's a fake fiat metric. And it's manipulated by money printing to manipulate it higher. I actually think GDP should go down as we create abundance because GDP is the cost of goods and services. They should be driven down to the cost of production. They should be driven down to zero. And so I think GDP growth should stagnate or fall, especially as population growth isn't extremely high right around the world. We don't have that much growth, right? But GDP growth will be positive because currency debasement and currency manipulation. But we can price in the force downwards in GDP, the cost of goods and services, via measuring it with an actual fixed measuring stick, which is Bitcoin. At the end of this video, I'll show you Bitcoin versus a bunch of other indexes that we might want to buy, for example, housing and commodities and technology stocks, because that's really the game here, right? Everyone knows that Bitcoin is going to outperform the dollar and other fiat currencies. They're credit systems, right? And so the dollar, everyone wants the dollar as a medium of exchange. And that means it has to be created, right, and inflated. You have to create the credit currency units. So people want dollars, they want to exchange. The banks have to create them. The central bank creates it. The commercial banks create it. The euro-dollar system creates it. They create the debt. It inflates at like 10% a year. So of course it's going to outperform. Is Bitcoin somewhat desirable over time as an asset to hold and store value? People are using it as that, and so it's going to outperform the dollar. That's not the game. The game is to outperform things that you need to buy over your life: healthcare, education, food, and housing. The spot Bitcoin ETF complex was the most successful ETF launch in history. Look at it versus gold. Absolutely insane. So is Bitcoin somewhat desirable? Yes. You can see the inflation rate of Bitcoin now is lower than gold, and it has much more desirable properties than gold. If you look at the properties of money, Bitcoin ticks all the boxes, gold doesn't. It's irrelevant. Gold, that is. Bitcoin is the store of value of our generation. You can see here as well Bitcoin volatility as an asset. Gold has done fantastically this year, to be honest. One of the best periods in its history. Well done. But I think the play, look, if you want gold, great. But Bitcoin's going to outperform it, right? 10-year time horizon, Bitcoin's going to outperform gold. It's outperforming it right now. You can see the 5-year CAGR is 67%. 5-year CAGR for gold is 10%. You are just keeping up with monetary debasement if you're making 10% as a CAGR. Right? That is monetary debasement. Equities, 11%. Great. Real estate, oh dear. Bonds, even worse. Look, Bitcoin being a broader, wider, diversified index, right, growing at 67% CAGR is the trade of our generation. It is the opportunity. One of the worrying things, to be honest, though, is where we currently are in this cycle, because I'm so bullish on BTC, but I'm also aware that we do get bear markets, and we're currently trading at a very high price. We're at an all-time high, but also we are highly above the realized cap or the cost basis of the network. And look, it can do that for a very, very long time, but it does often come back to the realized cap, right? And so that's the next bear market. I don't know when that's going to happen. I don't know what price we're going to get to in the meantime, but just looking at my trend chart right here, what I do is, plot Bitcoin. The orange line is the trend rate. You have the upper line where it seems to reject from most of the time, this lower blue line where it seems to bounce from. These green dots here are the 200-week moving average of Bitcoin. This is what I'm really looking at as the price of Bitcoin over time. So I think the 200-week moving average, currently around 41K, I think that's going to move up into kind of this area. But as you can see, the price of Bitcoin actually moves way above the 200-week moving average for the majority of the time. So I think the price could easily be above this. And it has to be above it to drag the moving average upwards, of course. But look, we're not early in this bull market, right? Down here was fantastic. We've had a 500-600% move already, right? Maybe if we have a great, rest of the bull market, maybe it's 150%. The risk reward is getting worse, right? We're near the mature end of the bull market. I'm so bullish on Bitcoin. I think it's going to keep going up. But, let's not get ahead of ourselves. We are entering the last bull market year if you look at Bitcoin cycles. So I'm super bullish. But yeah, just to be cautious, right? And just don't get too excited. Know what you're investing in, how long you're investing there. Because, look, we're well above the cost basis. And at some point, we do come back to it. It just depends where this gets to, right? You're either a long-term investor and you're happy to buy here. If you're trading, we're getting towards the mature end, and so trading probably has to tail off pretty soon. If we get up to like 150, 180, the risk reward isn't really there, right? Because how much can it move up more than that, versus the next bear market? So I just want to be really clear about this. I'm super bullish BTC, but just know your time horizon and the price that you're buying now. Are you happy to hold that for a longer period? Because I think we're getting into the stage where, as you move up here, if you're buying up here, let's be honest, you're going to have to hold for another 4 years if you start buying up here, which is fine for most people. But some people, if you need cash early, just think about that. You see, Bitcoin is on pace to meet our 2030 price targets. So their base case for 2030 is $710,000 BTC. I disagree with this. So 2030 is right here. And so I think the Bitcoin 200-week moving average may be around 200K. Why? Because the Bitcoin 200-week moving average is really the cost basis of Bitcoin, right? For long-term investors. I think it's going to go 40% CAGR and then down to 30% CAGR. And so can the price be up here? Can the price be 700K? It may get there, but I don't think it's the moving average, right? And you can't base your price analysis of Bitcoin over the price it may get to at one time at the top of a bull market. It has to be like the average price of the network. So I think this is a little bit maybe too much, right? So I'm probably somewhere, bear to bull. But ARK Invest do have a reputation of just going crazy with their targets. I'm way down here, but still I think, the CAGR of 20 to 40% is, one of the best in the market for this asset, right? That's the important thing for this asset. There'll be assets that outperform it for sure, but I can't build I can't build my long-term savings off that, right? You have to have the real asset, the large diversified fund, and with this, this growth. That's what I want to be in. There will be assets that outperform it, but this is the sweet spot for me. There's also some great info in this report about stablecoins and how they're just proliferating wildly throughout the world. There's two things that humans want. You want a reliable store of value and you want a reliable medium of exchange, and they're probably not best the same thing. And that's because we need credit. People want to buy houses and cars and other things that they can't afford right now, and they need a bank to create something out of thin air, like a contract, and give it to them and say, I've created this thing and pay me back the same. And so you can't do that with Bitcoin because banks can't create Bitcoin. Bitcoin is a store of value. Yes, it can be a medium of exchange if you have some, but if you want to buy a house, you want to take debt, and that means the dollar is going to proliferate. Smart contract chains are digital banks, and the best app on a smart contract chain is the US dollar. That's all the world wants. A reliable store of value, Bitcoin, and a medium of exchange where you can send it anywhere in the world for free, a stable coin. And that's it. That is the whole of this industry. And there's other things I know, but they're small and really inconsequential to me, to be honest. And I don't want to invest in them because they're too risky and Bitcoin's going up at 40% a year. This is stable coins right now. I think they're going to come here. So that's what the world wants, right? Bitcoin as a store of value, and then dollars as a medium of exchange. And there's going to be like 2 to 5 smart contract chains that are going to be the biggest digital banks, and they're probably going to do really well as well. I know we always look at Bitcoin price in dollars, but that's really only a good short-term metric for attention and money flow in the short term. What we really need to know, as someone who wants to save value over time, is does Bitcoin buy more desirable stuff in the future than it does now? Like housing and education and healthcare and food, clothes, cars. That's what we actually need. So this is Bitcoin valued in VNQ, which is a real estate index. And if you invert the chart, it shows that the cost of housing and real estate is crashing in Bitcoin terms. That's because it should. We have economies of scale. We do things more efficiently than before. And so the cost of actually manufacturing that house should go down. Housing should get cheaper when valued in real money. Now it goes up in fiat currency because the fiat currency is debt. Debt is placed on the house. The debt has to debase itself. House goes up in value in the debt. And that's the Ponzi system of the debt creation system. But the real value of a house is going to go down as it's just a commodity like anything else, and we can produce it endlessly and at cheaper cost. This is Bitcoin valued in DBC, which is a commodity index, zinc, soybeans, that sort of thing, right? Broad commodity index. Commodities are getting cheaper over time because we invent ways to get them out of the ground or grow them with more economies of scale. Cheaper goods and services valued in hard money. This is Bitcoin valued in the QQQ, the Nasdaq index. The most desirable financial index in the world is crashing in Bitcoin terms. That's because those companies don't own Bitcoin and their products and services are eating themselves alive. The only way that they sell more products and services is to give them to us for cheaper or better, more for less. And so they are capitalizing themselves on toxic capital known as the dollar. What they should be doing is buying Bitcoin, and that's why MicroStrategy has outperformed Bitcoin, because they're 150% Bitcoin. I don't recommend it, right? Leverage and everything, but look, abundant money creates scarcity. Scarce money creates abundance. It is a great report and there's way more to it, so I will link it below if you want to give it a read. But humanoid robots, absolutely insane, right? We are going into an awesome period in history. Abundance that we can price in with Bitcoin as well. If you trade, Bybit deposit bonus down below. And if you want to trade on Apex from your wallet, the permanent fee discount via that link below as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.